The RSI indicator can be an extremely powerful tool in trading, but many new traders miss that you can change the settings of the RSI to make it more effective and easier to use. In this video, guys, we will take a look at the RSI indicator, and more specifically, we will take a look at 4 RSI settings that you can change to make the RSI more effective and easier to use. So guys, let's not waste any more time here, let's jump right into it. Alright guys, so before taking a look at how to change the RSI settings to improve our trading, first you guys have to learn about one of the most effective ways to use the RSI indicator, and you will need this information throughout the whole video, so make sure to pay attention now. What we have to learn before changing our RSI settings is something called RSI divergence. And what is RSI divergence? Well, we have two main types of divergence. First of all, we have the bullish divergence, and we also have the bearish divergence. On this picture, the upper line represents the price, while the lower line here represents the RSI indicator. And a bullish divergence is basically when the price prints lower lows. So as you can see right here, we have one low and then a lower low, but at the same time the RSI indicator goes in the opposite direction and prints higher lows. So as you can see right here, the RSI printed one low and then a higher low. This right here is the bullish divergence, and the opposite is true for the bearish divergence. So for the bearish divergence, the price prints higher highs, right? So we have one high and then a higher high, while at the same time the RSI goes in the opposite direction and prints one high and then a lower high. And you may of course wonder, why is it so important to know about divergences? Well, the reason for this is that the bullish divergence actually indicates a potential reversal here towards the upside, while the bearish divergence indicates a potential reversal to the downside. And uses divergences to predict reversals in the market is one of the best ways to use the RSI indicator. Many people focus mostly on, overbought and oversold conditions, but many times that doesn't work at all. Experienced traders tend to focus much more on RSI divergences, and knowing this information will be important throughout the rest of the video. But now guys, let's take a look at our first important RSI setting. So let's start here by going up to the indicators tab here and search for RSI. RSI stands for relative strength index. So let's open up this indicator right here, and as you can see, now the RSI indicator appeared here at the bottom of the chart. Now let's go down here to the bottom left corner and press on the settings tab. And we can actually start here by unchecking the RSI based moving average. This right here is basically a moving average of the RSI indicator itself. And while it is possible to use the RSI based moving average on some trading strategies, many times it's much better to have this one unchecked. Now, however, let's go here to the inputs tab and take a look at the actual setting we want to change here. So we want to go down here to where it says source, and as you can see right now it says close right here. And close basically means that right now the RSI indicator will base its calculations on the closing price of all the candlesticks. But we can actually change this. So let's open up this bar right here and go down to where it says ohlc4, and we want to choose the ohlc4 here. And you may wonder, why would we want to choose this one? Well, ohlc4 basically stands for open, high, low, close, and this will make the RSI indicator base its calculations on the opening price, the highest price, the lowest price, and the close of the candle. So this will basically make the RSI indicator much smoother here, and it can provide clearer signals, which can be especially useful if you are a beginner trader. So let's choose the ohlc4 and press OK. Now guys, as we can see here, remember what we recently talked about? We talked about divergences. And as you can see here on the chart, you can see that the price, we printed one low right here, then the price printed a lower low, and we printed yet another lower low. But if you change your attention here and take a look at the RSI indicator, you can see that the RSI actually printed one low, but then a higher low, and then yet another higher low. So in this case, we can see that the price goes in one direction, the RSI indicator goes in the opposite direction. This is what we call, remember, a bullish divergence, indicating a potential reversal to the upside. And as you can see, after this divergence appeared, we indeed saw a strong movement here towards the upside. And by using our current settings, the ohlc4, this signal right here can actually be easier to spot. So let's show this by going back here to the settings of the RSI. Let's move this one to the side right here, and let's go back here to the close. Now when we choose close here, you can see here that it's still possible to spot the divergence. You can see we printed lower lows while we printed higher lows, but by using the special setting, let's go back here to the open, high, low, close. You can see that we get a sort of much clearer signal. You can see we have much smoother signals here, and this makes the RSI divergence easier to spot. Now guys, it's time to take a look at our second setting for this video. So now let's go back here to the RSI. We go to the settings tab once again, and now I want to take a look at the length setting right here. So as you can see, the standard length for the RSI is 14, and this basically means that the RSI indicator uses the past 14 candles to use its calculations. So if you want the RSI to be more responsive and move faster, we can actually shorter this length. So let's actually reduce the RSI length by half here and choose 7. And you will be able to see, let's press OK. When having a shorter length on the RSI, you will realize that changes in momentum, so when the price starts changing here in speed or velocity, this will lead to much faster changes here on the RSI indicator. And many times by using a shorter RSI, these kind of divergence signals can be even clearer. So for example, right here, now you can see that we had a very clear, low right here, very clear lower low, and then yet another lower low right here. However guys, it's important to understand what this setting means. So let's go back here to the settings once again. So if you, for example, choose the RSI setting to just a short length of 2, this basically means that the RSI indicator will only base its calculations on the last 2 candles. So you will see that the RSI will go crazy now when we click OK. So as you can see, in this case, when we only base it on 2 periods, you can see that the RSI pretty much reaches the max level here multiple times. You can see every time we see 2 strong candles in a row, it will reach its max level. So it's important to not go on a way too short calculation period, but a calculation period of around 7, some people prefer to use 9 instead, can many times be preferable because you get these sort of quicker movements. The RSI is much more responsive to changes in the price. So now guys, the time has come for our third RSI setting. And this setting right here will allow us to catch these longer term movements, and in turn this can lead to making very large profits. So what is this setting? Well, right now, remember from the previous setting, I just want to make sure, you can see right now we're using an RSI length of 7. But what you can do here, if you are looking for these larger swings here in the market, is that you can do the opposite of what we recently talked about. So you can increase the RSI length. And as always, it's very important to understand exactly what we're doing here. So let's just change the RSI. Remember, the standard RSI is 14. So let's actually double this length and change it to 28. We can also, as we have done throughout this video, we can also use the open, high, low, closed, which we talked about in our first setting of this video. So let's change the settings to this right here. All right, so to make this example as clear as possible, now I have 2 RSI indicators on the chart. The first RSI indicator is this one we talked about, RSI length 28 and open, high, low, close. The second RSI indicator is an RSI length of only 7, and the source is open, high, low, close. And remember guys, this setting is all about finding the longer swings here in the market. And as you can see here, if you look at the upper RSI indicator and compare it with the price, you can see that the price printed one low and then a lower low, right? So lower low on the price, but we can clearly see that we have a divergence. So the price prints lower lows while the RSI prints higher lows, indicating a potential reversal to the upside, right? However, if you take a look at the shorter period RSI, so the RSI based on 7 periods, you can see that in this case, the RSI divergence is very hard to spot, and we pretty much don't even have a divergence in this case, because as you can see here, we have a low all the way down here, but the next low, which is much higher on the upper RSI, is pretty much at the same level here on the lower RSI. I hope you can see it right here. So if you are looking for swings that are longer term, it can be a very useful tool to adjust your RSI indicator based on that. Alright, okay, so now let's take a look at our fourth and final RSI setting in this video. And this is a setting that everyone needs to know about. This one is super important. So let's take a look at this one right away. We go here to the settings tab of the RSI. And now we actually want to switch attention and we want to take a look at the style tab. As always, we have the RSI based moving average unchecked, because the moving average in many cases just makes the chart more cluttered and noisy. So let's keep this one unchecked. But what you can do here, remember from earlier in the video, we talked about that using the RSI indicator as an overbought and oversold indicator is many times not actually a good idea. However, there are a few use cases, and what we can actually do here is that we can change the upper band. The standard setting for the upper band, which is the upper line here of the RSI, is 70. So what we can do here is we can actually change it to 90, and we can change the lower line to 10. This will make it so that in order for the RSI to be either overbought or oversold, we need to have very extreme points here in the market. So let's click OK here and let me show you guys what I mean. So as you can see, now pretty much all points here on the RSI will be within the bands here. So the RSI will pretty much always be below 90 and above 10. But at the few moments when the RSI actually reaches above either the upper 90 band or the lower 10 band, this can actually give us some useful information about the market. These points right here, you can see we have one example right here. We have another example of the RSI being above 90 right here. This is what we call emotional extremes. And what I mean by this? Well, when we are at an emotional extreme, such as we are right now, this is an indication, especially if you are in this trade. So if you are long right here, this is an indication to be very cautious, because when we reach these kind of levels, if the price start to reverse, right, it can go very fast to the downside. So you can use the RSI indicator with 90 and 10 to find these points in the market where we need to be very careful. And at these points, you can look out for price action. So you can look out for, price action indicating that this, massive rally might be coming to an end. So as you can see, for example, right here, we had this massive rally towards the upside, and then this red candle right here appeared. This is actually pretty much what we call a hanging man pattern, and that is a bearish Japanese candlestick pattern indicating a potential reversal to the downside. So by combining that the market is right now at an emotional extreme, and we are also seeing a bearish Japanese candlestick pattern, this is a sign that this massive rally might be coming to an end. And as you can see, this hanging man right here was actually the beginning here of a pullback, and this pullback right here marked the end of this rally. You can see it was actually the beginning of the next downtrend here. Alright guys, so now when you have learned more about the RSI and RSI settings, I think you're ready to learn more about trading indicators. And the moving average is another super popular indicator, but so many people use the moving average wrong. So guys, if you have the time, I highly recommend you guys to watch this video next.